For a while now, we have been tackling the ETF deluge that is sweeping this industry, and a lot of it was just conjecture and hype until lately. However, the largest move in cryptocurrency history is currently taking place in relation to ETFs, and this will be crucial, particularly if you own XRP, as older coins like XRP have the most files associated with them. Since most of those ETF registrations are spot-based and have an effect on the spot value and volume surrounding these older coins, we have been patiently waiting for many of them to be accepted for XRP, because doing so will trigger a huge flood to hit XRP. Having stated that, let's examine this post by Nate Garlinghouse. We've since April 8th, when the S&P 500 hit a low of about $34 billion, spot cryptocurrency ETFs have led all ETF categories in inflows. Additionally, next month we'll see the release of a slew of new cryptocurrency ETFs. Check out this list. Over $33.5 billion is associated with spot cryptocurrency. Compared to theme funds, which diversify equity beyond the Meg 7, that is over $10 billion more. This demonstrates the current level of interest in cryptocurrency in the US and beyond. Furthermore, the SEC just provided us with its most significant news, which was the approval of generic listing rules for commodity-based trust shares on the 17th. As a result, the market now has a standard for ETF registrations. Additionally, this will speed up the approval procedure for those files. As the SEC expedites approvals, we already have cryptocurrency exchange-traded funds ETFs from Yahoo Finance that are expected to flood the US market. It comes from Reuters. Listen up, it's absolutely true. ETFs are beginning to enter the market. 21 exchange-traded funds ETFs own either Bitcoin, Ethereum, or both. However, consider all of the other ETF applications that are currently awaiting old coins. I estimate that there are more than 40 of them simply standing in line, waiting for anything to happen. We did receive an update from Bitwise because Matt Hugan, our resident writer, wrote this post on September 15th. This is what just happened. This afternoon, generic listing rules were adopted by the SEC, and I want to offer you guys a perspective on what's going on here, so I want to read this quickly before looking at it. Thus, prepare for the cryptocurrency ETF. Palooza. Recently, the SEC developed general listing requirements for cryptocurrency ETPs. What effects will it have on markets? I usually try to provide a perspective on market developments in these CIO memos. For example, I discussed why it's Solana season and forecasted a robust year-end push for Ethereum's leading rival last week. It's good to see that Solana has recovered 7.72% since then. However, observing the cryptocurrency market at the moment is similar to witnessing the pre-game show for the Super Bowl. With rate cuts, ETP inflows, growing dollar fears, and remarkable momentum in tokenization and stablecoins, the stage is set for a dramatic end-of-year surge. But for the most part, we investors have been waiting. Why? The two worst months of the year for cryptocurrency historically are August and September. The main explanation, however, is that significant advancements such as the recent authorization of Bitcoin ETP at significant wirehouses or the advancement of new legislation in Congress frequently take time to materialize. I thought I'd give you an update on the SEC's crypto ETP clearance process while we wait. In my opinion, the SEC is preparing to blast the market apart. This is the post that Matt Hogan wrote. That relates to the 15th. How will generic listing standards affect the space of crypto ETPs? The ETF rule, which established generic listing requirements for conventional ETFs, was passed by the SEC in late 2019. The number of ETF launches increased from 117 annually to 370 annually. If general listing rules are introduced to cryptocurrency this fall, anticipate the same kind of growth. This brings us to the ETF rule. This was the mean. And take a look at that enormous upward surge. We recently received this permission. Additionally, we have Eric Bakunas over here. A deluge of products and more competition from exchanges to list such ETFs will result from the generic listing rules for crypto ETFs. With 41, the CBOE curve has the most cryptocurrency ETFs, followed by the NYSE. Nasdaq lags behind, but it has IBIT, which is possibly the best initial public offering IPO of 2024. So listen, this is going to cause a tsunami when we consider it. We are going to see some of the biggest movements in this space as the SEC is set to blow the lid off of cryptocurrency. People probably aren't aware of just how much of a game changer this is. In addition to this, we have this over here. This occurred on the 17th, the same day that the SEC approved that framework. The listing and trading of Grayscale's digital large cap fund, which includes Bitcoin, Ethereum, XRP, Solana, and ADA, were authorized by the SEC. We have another listing now, don't we? At the very least, it was a file of a fund that was quite comparable, and that was recently approved as well. Let's get started. Crypto assets other than Bitcoin and Ethereum, such as XRP, Solana, and XLM, can now be owned by hashtags, the Nasdaq Crypto Index, and US ETFs that have been permitted under the SEC's new generic listing rules. Indeed, these will be among those included in this. Once more, this demonstrates that this is already taking place. For example, if we were considering what is going on here, you could have assumed based on the video's title that this is clickbait or something. No, this demonstrates that the SEC is indeed going to reveal everything about cryptocurrency. This is the news release for hashtags. The NCIQ is currently growing and will change in the future as new assets satisfy the indexes and listing requirements, thanks to recent regulatory modifications and the implementation of generic listing standards. Once more, the SEC's recent actions were the cause of this. And now this. Even more files pertaining to ETFs are beginning to appear. For instance, the BlackRock registered iShares Bitcoin Premium ETF registration is about to happen, is protected. In order to provide Bitcoin with some yield, this is a cover known as the Bitcoin strategy. The $87 billion IBIT will have a 33x spot product sequel. Once more, we are keeping an eye on the increasing number of filings that enter this area. The deluge is happening right now. We recently received a significant update from BlackRock as well. This is with Robbie Mitchnick actually. Naka Orshi posted this on his YouTube channel. This is our Crypto Prem pod if you guys would like to go check it out. We talk about the enormous success of IBIT and Ether, Bitcoin and Ethereum in larger portfolios, as well as tokenization, general listing criteria, staking and spot ETH ETFs and stablecoins. Guys, take a look. Let me ask you a question on product development. You are not required to respond to the first section. Actually, if you're practicing it that way, I don't expect you to comment on that probably won't then. Okay, so you haven't yet filed for a spot Solana ETF and a spot xrp ETF, which I have publicly projected BlackRock would do. Again, I don't expect you to say anything about that. However, I would like to know how BlackRock is considering developing new products connected to ETFs for cryptocurrency. Due to the two enormous success stories you have had with Ether and IBIT, your concentration must undoubtedly be on that. But what about going forward? Obviously, a number of elements influence that decision-making process, but our clients are ultimately the main motivator. How much demand is there from investors? What is the investing theory and reasoning behind these possible products for both our clients and investors? For them, what issue are we resolving? Therefore, while considering other possible prospects in this field, we naturally consider factors like market capitalization, liquidity, and maturity, but we also consider the clarity of the investment thesis and general product and portfolio issues around how customers will be able to employ products in this area over the long term, and construct the kinds of holistic portfolio exposures they desire. Thus, that is an ongoing assessment procedure. That's the type of procedure we use in the end, but it's not a set point in time thing. Additionally, XRP fulfills all of the requirements for the procedure he just described. Considering everything that is going on in this area right now, with so many more filings coming in, we just received another one on the 24th for the Amplify XRP